So today we'll be talking about a newly released ETF from ETF Securities called ASX HGen, which is the hydrogen ETF. Now this ETF was released a few weeks ago and we're going to talk about what makes this ETF and hydrogen so valuable as well. If you guys are new here, my name is Faizy. This channel is about finance and investing. Before we begin, as usual, make sure to do your own research. This video is not financial advice. Let's jump into it. So HGen is giving us exposure to the leading hydrogen companies, and the focus here is specifically on pure plays. Now, pure plays basically means that companies that are directly involved in being part of the whole hydrogen infrastructure, like stuff like storing the actual hydrogen and actually making the equipment that actually allows green hydrogen to be possible, these companies are classified as being pure play. So because of that, these types of companies can have an overall weighting of up to 10% in the overall portfolio. So looking at the benefits of this ETF, starting off with number one, which is invest in the energy transition as the world moves away from fossil fuels. Now this is quite important because there's lots of other mega trends as well, like the AC/DC ETF that's actually focusing on battery technology. So we can see that the world is generally moving towards this more direction towards sustainability. And this ETF is basically one way to actually take advantage of this new movement towards green energy. Now, the thing with hydrogen is that if you use green electricity to actually make hydrogen, the only byproduct it produces is just water. So it actually produces zero greenhouse gases, so it's very efficient for the environment. Now, the second benefit of this ETF is, of course, the fact that you get to access the world's leading hydrogen businesses accessed in a single trade. Now, this is usually a standard benefit of ETFs in general. Of course, it is very hard to actually research companies that fall in this realm of green hydrogen, so it is much better to actually access an ETF and just buy an ETF that tracks that specific sector and get that exposure rather than actually doing all that research yourself, because this sort of sector is a very niche sector. It's a very niche sort of sector that's going to grow in the future. So of course, it is very hard to actually research those companies in the first place. And the third main benefit is the potential to actually access a potentially high growth, clean energy story. Now, let's actually talk about this. Now, just on this point, we are seeing more and more of the developed world, especially taking charge and giving subsidies when it comes to green hydrogen projects, with Europe actually leading the way. Europe actually has more projects compared to the US or Australia when it comes to looking at green hydrogen, and we are seeing more and more governments trying to reinvest into these sorts of sectors and providing more and more subsidies. So that is one thing that ETF Securities looks for when looking at a theme. Now, research done by Goldman Sachs says that hydrogen energy market is worth about 5% of the overall market, which is about $142 billion. And by 2050, that is going to grow to 25% of the overall energy market. And that's going to represent a massive $4 trillion of the overall market. So the growth is definitely there, the research is there, and this ETF pretty much gives us a way to capitalize on that. Now, you might be thinking, great, another energy ETF. Why should I even look into this? What's so important about hydrogen? It just seems very boring. Why should I invest in this when I can just buy AC/DC and just get exposure to the lithium market? Why should I look into hydrogen? Now, the interesting thing about hydrogen is the fact that it is so abundant when it comes to the overall Earth. It is very abundant in water. And as we know, the overall surface of the Earth is about 75% water. So we do have a lot of hydrogen that's available in the world, and it's not going to run out anytime soon. Now, why this is worth it is because hydrogen actually contains 3 times more potential than petrol. So it could be really efficient when it comes to powering cars in the future as well. And there is no carbon dioxide emissions if it is produced using green hydrogen, which is pretty huge. Now, if this is done right, and if it's done at scale, hydrogen basically has enough energy density 3 times more than oil, which means that if it's done correctly, it can really replace oil over time. It can be enough to even power cities as well. So it's a huge thing moving forward if it's executed correctly. A lot of the hydrogen that we use is focused towards gray and brown. So as you can see, a lot of it actually emits CO2, with natural gas going in, CO2 going out, coal going in, and CO2 going out as well. So it's not really good for the environment, but the shift is going more towards using green hydrogen, as you guys can see down the bottom, with green electricity being used to actually generate power. And what it gives the environment is just oxygen. And then lastly, looking at the blue hydrogen, as we can see, it is produced using natural gas. And this, of course, still produces CO2, but what they do is actually they just put CO2 underground and actually put it in underground storage. But for the long term, that is not really a good strategy. So the shift is moving towards green hydrogen. So with all these methods, of course, green hydrogen is what we want, and this is what this ETF is focused on. Now, with this green hydrogen process, basically what happens is that it essentially splits the water and it gives us hydrogen through a process called electrolysis if you guys were curious. And this flowchart basically shows us how it all comes together. So basically, you can use renewables to actually produce this sort of electricity, and then it goes through an electrolyzer, and the hydrogen can actually be stored through the caverns, and it can be used to actually power a gas power plant and the electrical grid as well. So that's the first sort of thing. Secondly, it can be used to actually refuel things. It can be used for ships as well, for those long distance travels, housing, and industrial demands as well. It can also be used in farming. So the applications are quite wide. It can be used both for the government levels, for the corporate levels, and also for the consumer levels as well. So you might be thinking, if hydrogen is so available to us, it is much more denser than oil, it can give us much more energy than oil, it pretty much seems like a no-brainer to start using hydrogen. Why aren't we using it? Now, one of the biggest reasons why green hydrogen is not being embraced more fully is the fact that it is very costly. It can even be 3 times more costly than other methods out there. And as we know about these big corporations, they're not just going to suddenly try to, use these green methods and increase their costs, 2 to 3 times just to actually be more green. They're simply not going to do that. There has to be much more incentive to actually reduce the cost for these companies to actually jump on board. Now, with that being said, the price of hydrogen is falling, and through innovation and continuous government support, the price of this should be falling, and it should be the same as other methods out there like fossil fuels by the end of the decade, according to some studies, which is a very good sign. Now, looking at the price performance for ASX HGen, as we can see, it was only listed a few weeks ago, since 7th of October, and since then it actually has gone up about 32%, which is pretty insane. But of course, past performance does not guarantee any sort of future performance, and the ETF has only just listed, so we can't really tell too much about this sort of ETF. But let's actually have a look at the index itself and see what it's actually tracking. So this is the index, as you guys can see, and it only really launched on the 31st of July. So it's only really been, say, a year and a half since the index actually launched, and the actual overall return for the ETF is still positive. It started off at 1,000 and currently it's sitting at about almost 2,000, so it's almost doubled. But since looking at the year-to-date return, this is actually negative, so the return actually hasn't been that good overall. It's been negative for that sort of year-to-date period. Now, a few reasons for this is, of course, the fear of interest rates and things like that. There was a huge run-up towards the later end of 2020, as you guys can see, from around November to around December. The index pretty much doubled. It was almost like a 2.5x return or something like that. So it's pretty insane. So of course, the prices are about cooling off at this period. But overall, if you actually research this thematic and the trends, the overall long-term trend is there. So if you are going to invest in this ETF, as I always say, have a long-term view, and that's it. Do not have a short-term view. So looking at some of the general information for this ETF, it was launched on 6th of October, so it's been about a month and a few days. The management costs are 0.69% per year, which is pretty standard based on ETF securities, other ETFs. And this costs us somewhere around $69 per $10,000 invested. Now, to a lot of people, that might seem like a lot, but to actually access this sort of thematic, I think it's a pretty decent price, given that to access these sorts of companies, it is going to be quite difficult to research them. So to just access all those companies for just this much cost is very good, in my opinion. The distribution frequency is annually, which basically means that you'll be getting an annual dividend. But just keep in mind that this is not a dividend-based ETF. This is more focused around the long-term growth perspectives of this trend. So do not buy this ETF just for the dividends. Focus on the long-term growth of the actual price of the ETF. Now, you can actually buy this ETF completely brokerage-free using a broker called Pearler, as you guys can see. Since this ETF forms part of their free ETFs, you can buy it, and as long as you hold it for over a year, you won't be paying a single dollar of brokerage. But if you do sell, you'll be paying brokerage then, and still then the brokerage is $9.50 per trade. So effectively, you're paying about $4.75 to actually buy and sell. Now, Pearler is fully CHESS sponsored as well, so if you want to go check it out, you can check out the link in description and use the invite code right here, Faisy, which is basically my first name, and you and I can both get free trades to get started, so go check it out if you're interested. So looking at the holdings for this ETF, we can see you've got a bunch of names like Plug Power, Ballard, and look, I'm just going to be honest here, I don't really know any of these companies at all, but if you do want, you can also research these companies to get a much more in-depth view, and this can be a starting point for your own research and for your own understanding as well. But these sorts of companies basically give us exposure across the value chain, which is the good thing about ETF securities, ETFs in general. basically you'll get exposure to stuff like fuel cell makers, refueling stations, hydrogen storage solutions, distributions as well. So pretty much across the whole value chain, you'll get access to those sorts of companies in those mini industries. The sector allocation mostly leans towards industrials at about 80%. Then you also have materials at about 20%, a bit of IT, and a very minuscule amount in consumer discretionary as well. And lastly, looking at the countries, the focus is mostly on those developed countries with US, Britain, Canada, and a few European countries as well. And with this ETF, there are ESG screens as well. Now, as you guys can see, there is absolutely no allocation towards any companies in Australia. And the reason being is because currently the companies on the ASX don't actually have the market cap or liquidity requirements of the actual index. Therefore, there are no companies that have actually been added into this portfolio from Australia. Because the thing is, to actually qualify to be in this ETF to begin with, the core business has to be mostly hydrogen. It can't be a lot of it oil and a little bit of hydrogen to be actually classified as a hydrogen ETF. It has to be mostly hydrogen. It has to be green hydrogen to actually be included in this overall ETF. Now, when it comes to overlap, as you guys can see, if you actually buy HGen and you buy some other ETFs from ETF Securities as well, you will actually have zero overlap as of 31st of August 2021. So basically what that means is if you're trying to invest in the green energy sector and you're also looking to invest in ETFs like AC/DC to actually get access to battery technology as well, you will actually have zero overlap with this ETF, which may be a huge selling factor for you if you're looking to consider this ETF. Now, speaking of AC/DC, you might already be investing in that ETF already, and you might think to yourself, is it really worth investing in HGen as well? What's the real value that I'm getting when it comes to investing in HGen along with AC/DC? And the answer is, according to ETF Securities and the webinar that I listened to with them, they basically said that these two ETFs can coexist in a portfolio because these are complementary technologies. Now, when we look at batteries, right, batteries can't solely power huge container ships and huge aeroplanes as well, like, those huge passenger jets. It simply can't happen. The actual battery would need to be insanely huge and it just wouldn't work. But hydrogen can actually do that. Hydrogen can power airplanes. It can also power huge container ships as well. So the potential is there. These are very complementary technologies as said by these guys. They're very interrelated, but they're also different in many ways too. So this was the full breakdown of HGen. Personally, I won't be investing in this for now, but let me know what your thoughts are. I think it's a pretty interesting opportunity. Now, ETF Securities has done a full in-depth webinar of this exact ETF on YouTube. So link in description, go check it out on their channel. It is very informative. It's very interesting. Now on my channel, I've done a full review of AC/DC, which is the ETF that we spoke about a lot on this video. This is a battery tech and lithium ETF. Check this video out for an in-depth review. And guys, thank you so much for watching. Please like and subscribe, and I'll see you in the next one. Bye now. Now, ETF Securities has done a full